Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of the 100 of the largest domestic and international non-financial innovative companies listed on the Nasdaq stock market. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me is Chris Dearborn, Managing Director on Nasdaq's Market Intelligence Desk, for our daily update. And Chris, it's been quite an interesting back half of the session for trade this afternoon.
Really has. We've rolled over here a little bit this afternoon from a strong start this morning. A lot of good news on the tape for the most part coming from last week's good session. Nasdaq-100 is up about 2.5% for the week. A little bit. We'll see where we end up today, but we rolled over a little bit here, not a lot, but we have gone from plus to minus. Again, continued leadership of mega cap tech names, positive COVID-19 updates across the board have given this market a little bit of boost. Again, we're starting to fade here a little bit, but still holding even, still okay.
All right, if we take a look at our first chart here, this is a Nasdaq-100 daily, I believe. And what are you seeing in terms of what price action is confirming?
Again, so the Nasdaq-100 keeps continuing to make higher highs. You've got good breadth in the index as well as a continued higher RSI. So we'll talk about all of those. So first, let's look at the breadth. You've got 85 companies of the Nasdaq-100 that are trading above their 50-day simple moving average. Again, that is tremendous. What you're looking at is positive momentum across the board of almost every member of that index. And again, it's still the same larger tech names that are even up more than that. And to add this, you've seen 40 members of the Nasdaq-100 make new 52-week highs in the last week. You know, and you're seeing some of the usual suspects up there: Apple, Amazon, a number of others. Tesla is outperforming as well. So as we continue to march higher, and we made a high today of 11,069, unbelievable, really, with what we're doing. But we've rolled over here a little bit. We're lower by almost 90 points right now from that high that we made this morning. So when you look at the relative strength index, the relative strength of RSI is an identifier of overbought and oversold conditions. We've talked about it plenty of times. A number of 30 or lower shows an oversold condition, while 70 or higher shows an overbought. The Nasdaq-100 has been teetering on that 70 number for the last month now. And every time we cross over it a little bit, 72, 73, we're at 73 this morning. We're now at 69 now in the current state of things. It's not quite entering that overbought condition. That's why we keep seeing smaller Goldilocks baby step highs as the index moves higher. So again, you have some significant leadership across the board, especially on the point basis, which we'll see in the next screen, but we're trading near all-time highs. If we start to roll over on the Fibonacci level, 76.4 retracement confirmed the move, and we've been above that 76.4 level since June 30th. And that stands at 10,055. So significant move to the downside here with plenty of room without a lot of major support. So look for us to continue to bounce up against these highs. But if the market rolls over and say you get a 2-3% correction, we could be at 10,055 very quickly. Yet if that holds, we're still going to move higher in the longer term.
Yeah, and Chris, let's take a look at your second chart here, which shows the performance of the individual Nasdaq-100 constituents. And we get it. We get the Apple, we get the Microsofts, we get where people are putting their money towards longer-term plays that are the future of our economy, what we call the modern-day industrials. But wow, Tesla, up over 500% since the beginning of the year. And the moves it's been making even today is just, I mean, that's really the story if you're looking at to trade things in and out.
Correct. So you still see Apple up there. Tesla absolutely has been tremendous. They had a couple of upgrades again today. The move recently has been tremendous. Comments coming out of Biden's political campaign about EV has added to this boost of positive speculation. You've seen Amazon's rolled over a little bit here. They're now down, about 0.2, 0.3%. That's taking 4 points off, where if you look at the heat map before, they were a positive net gainer. Pepsi, which is having an outstanding day on the back of earnings, is up over almost 1.5%, adding 2.5 points. And Microsoft is giving back a little bit today, down about 1.5%. Adobe as well, about 3.3. So what you're looking at is about a good mix of about 50-50 between advances versus decliners today. And this morning was more like 70-30 advances versus decliners. So you're seeing some of these companies that have reversed a little bit. Again, this is just, it's only 3 o'clock. We'll see what happens in the next 45 minutes into the market. If you get Amazon, a few others to roll back to the positive side, you're going to see a positive close in the NDX. One more thing to note, they announced a membership change for this upcoming Friday. Moderna is going to be added. CoStar is going to be removed.
All right. And Chris, one more thing before I let you go here, earnings season. And, you know, it's always interesting when you get into the third quarter, actually the second quarter, but the third quarter of the year when we do earnings season, because I feel like this is the one that is the most fast and furious. You're only looking about 4, maybe 4.5 weeks of reporting versus the 5 to 6 weeks to get an earlier quarter. So there's a lot coming out here over the next few weeks.
It's going to be a good look at how the companies have fared. Again, the large cap names have had a better run for it for the majority of it, especially large cap tech. There were more positions, better balance sheet, more cash. Companies that were a little bit more dire straits, more levered, are going to have a hard time here, especially as Q2 and Q3 start to roll through. Look for the Q2 earnings to be mixed. The read-through here is how companies are going to be positioning themselves, how they did with the PPP loans, if they took them, also how well they've done to regain their consumer base, if so, and more importantly, their customer base. If those start to tick up, if you have the questions being asked on those items, then look for positive momentum. Again, when you're looking at earnings reports, you're looking at what they're saying about the future. We know what the past has been. It's been a really rough go this entire year. A lot of people saying 2020, you're going to throw the entire year out. So let's see how everybody's positioning themselves through Q3 and then Q4 for the rest of the year. And if those are positive comments, look for those companies to be rewarded on speculation.
All right, Chris, great stuff as always. Thanks so much for joining us on Trade Talks.
Thanks, Jill.
All right, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.